Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for Atlanta Business Radio. Brought to you by OnPay. Built in Atlanta, OnPay is the top-rated payroll and HR software anywhere. Get 1 month free at onpay.com. Now, here's your host.
Lee Cantor here, another episode of Atlanta Business Radio, and this is going to be a good one. But before we get started, it's important to recognize our sponsor, OnPay. Without them, we could not be sharing these stories. Today on Atlanta Business Radio, we have Josh Lloyd with Yieldi. Welcome, Josh.
Thanks for having me. Appreciate it.
Well, I'm excited to learn what you're up to. Tell us a little bit about Yieldi.
Yeah, so, Yieldi, we've been around about 2 years now, and really the idea came out of a need for myself, actually, to figure out different ways to invest my own money. I exited from a couple different companies in Atlanta over the last 10 years. So after doing so, I was a little bit burnt out and not really looking to start another company at the time and just trying to figure out how to make my money really work more than I had to work. Stock market's great, but as we know with that, it's a little bit unreliable if you want to have consistent monthly passive income. So in my search for finding something that would provide me consistent monthly income, the only way I could really think to do that was with real estate. I didn't want to have anything that, there wasn't any underlying collateral. I certainly worked really hard for the money I had made and didn't want to put it at risk. So that's initially, at least my 50% of how Yieldi started. Unbeknownst to me at the time, I really wasn't looking to start a business. I was actually just learning about the real estate market and finding different opportunities to invest my money safely. And I met my business partner, Joe Ashcody, who's lived in Atlanta his whole life. And Joe and his family have about 50 years of real estate experience, new construction, retail, shopping centers, multifamily, and so forth. And so at the time Joe and I had met, which is about 3 years ago, he actually was looking for different ways to invest his money. Typically with his businesses, he was doing new development, and the construction costs were going, kind of high and in some cases out of control. It was hard to find properties, and he started to realize himself, hey, if I invest my money in loans for other folks that are doing different ventures, I actually will make more return on my money with a lot less work. And so, very serendipitous, I guess. He and I met at the gym. It's a big part of our lives. We work out a lot, and we were just, I literally couldn't make this up. It was 6 o'clock in the morning and we were running around the building outside, and he asked me what I did. And I told him I exited a few tech companies and I was lending money. And he said, God, I'm trying to do that same thing right now. That's so interesting. And, one thing led to another, and 6 months later we had Yieldi. So that's kind of how we got started.
Now, when you're talking about real estate, are you talking about all facets of real estate, like residential, commercial, just land? Like where is the kind of lines around real estate?
Yeah, so it's a really good question, and probably one of our key differentiators, amongst other people that are doing lending. When I first got started, I was really hyper-focused on single-family residence. It's easy to understand, especially rental properties. You can understand the rental income that's coming in. You can understand how to value that property. But the beauty of working with Joe is that we're really able to use our underwriting team from his other fund to help us to underwrite all sorts of properties. So whether that's commercial, residential, we will do land for sure, multifamily, and less so now just because of COVID, hospitality, hotels and restaurants. But it really allows us to diversify where we allow our investors to put their money.
So now, is this kind of a chicken and the egg thing that you need both investors and you need people to, kind of join the marketplace?
Yeah, exactly. So I love to refer to it as a seesaw. On like any other good startup, you have your stresses, and I walk in 1 week and I'm feeling amazing because I've got, all these investors are excited about investing with us. And then I realize, wait, we don't have enough deals. And then I have, by the end of the week, I have too many deals and not enough money. So we always joke about that, but I mean, that's exactly what it is. So, with any kind of good supply and demand marketplace, being able to bring the borrowers that need the money with investors that are interested in having an opportunity to invest in these real estate projects they wouldn't otherwise be able to, is been, it's proven so far to be something that's really exciting and really desired in the space. So we've, been able to kind of latch on to that and grow, and then stick with our underlying underwriting principles to make sure that the real estate assets that we do allow the investors to participate in are safe and well underwritten and have good loan to value as well.
So now, do the investors kind of, I don't want to say dictate, but encourage, like, okay, we'd like more residential deals, or some say we'd like more commercial deals, or are you kind of agnostic that you don't care, so you're just getting deals and you're putting them out there, and then you're just letting kind of supply and demand say, okay, let's get more commercial because that seems to be where we have more interest?
It's a little bit of both. At the end of the day, for us, the way I would say, when we market more on the borrower side, and we've established a really good reputation on a national level at this point in the space of private lending, we will look at a commercial and a residential deal. We'll look at, any kind of deal really. If we see good value in it, and here's the way I know I determine good value, I'm putting my own money in these loans. Joe is putting his own money in these loans. Our families are putting their money in these loans. So we know that from our point of view, because we understand the real estate, we're fairly agnostic ourselves. But the really cool part about the marketplace is the investors get to select, So if you think about a traditional REIT type product where, you've got this fund and it's promising you a certain return, but you don't really know what the underlying assets are, that's one of the big differentiators for us. So if you yourself say, hey, you know what, I really like residential, or I also really like industrial properties. So when we make these properties available and we explain why we like them, why we chose to invest in them and so forth, you get to kind of pick which properties are right for you. So as our investor pool is growing, they're getting to select those. We've got a specific investor here in Atlanta that he's very partial to Georgia residential properties. We've got others that are partial to Florida residential properties. We've got other that they like businesses with upside, so it's really all over the place. But at the end of the day, we're just looking at underwriting and originating loans that make sense, that have very good loan to value, so that, in the case of a market downturn, in the case of the worst case scenario of a foreclosure, and we have to take the property back, that will be able to make everybody whole, those types of situations.
So now there's some similar, I don't know how similar, but I guess in the neighborhood, similar companies, technology companies that allow the investor to invest like in a individual home. Is this something like that where I can invest in an individual deal, or am I buying kind of this basket of stuff?
It's more what you're describing. So it's really what I was looking for, and then realizing and talking to other people, like, God, this just makes sense, right? Like being able to say, I know that property, over on this particular street in Atlanta, and I know exactly what it's worth. And I know that this just makes sense to me as an investor, and I can put money directly into that. And then for us to take that idea and leverage my background, which is technology, Joe's background, which is understanding the real estate, putting together something, a loan on that deal, using technology to make it hyper efficient, and then letting the investor hand pick that individual loan, and then scaling that nationwide. That's basically the growth model of our business.
So as a user, or what would I be if I say, okay, I'm interested in doing this? I go to Yieldi.com, I sign up, I guess. Do you have to be an accredited investor to do this, or can anybody do this?
Yeah, great question. So the process you described is exactly right. You go to the Yieldi.com website. There's an investor sign up form. You go ahead and fill out that information. As part of that process, you'll fill out a subscription agreement with us, and you do in fact have to be an accredited investor to do so. And that's beneficial sort of for everybody involved. And once you've done that and you have your paperwork with us and you're good to go, you literally can just go on the Yieldi.com website and handpick which properties you're interested in and start investing. We're usually, making available about 1 to 2 properties a week. Once we make those properties available to invest in, it usually takes maybe at most 48 hours before they're fully filled up in terms of investors and their money in those loans. We usually have I don't know, anywhere. It depends on the loan size, of course. Our loans range from $100,000 on the lower end to over $5 million on the higher end. So, anywhere from 2 to 8 investors in any particular loan.
And then what are the kind of the ranges of investment size you have to do for a given loan?
So, obviously, if it's on the smaller side, we may set the minimum in that loan to maybe $25,000. If it's a $5 million loan, we're probably going to set the minimum to at least $100,000. So, and it really varies, just loan by loan, honestly.
And then because you're dealing with accredited investors, then you can kind of go nationwide immediately. Is that right?
Yeah, exactly. So what's so interesting for me, having scaled and sold a couple different technology businesses and starting to do this, it was like, as I mentioned earlier, I was kind of like, I just want to make enough passive income and just kind of go hang out with my dog and walk around Chastain Park. And that's where I started. I mean, I made it like 90 days and I was like, okay, I can't walk my dog around Chastain Park anymore. But the interesting thing, and it's just like my other businesses that I had started, this area of the market, this private lending area is sort of just ripe for some national attention because there's starting to be more consortiums. There's more trade shows around the space. The legal side of things has really picked up to make it very, very standardized. And so being able to leverage technology, be able to look at more and more types of investments and then bring on more investors and let them have the ability to look at these. We just saw just kind of a really nice opportunity to do so. Interestingly enough, like statistically speaking, and this was actually a surprise to both Joe and myself, when we started to actually build the business and we started to build out our PowerPoint and pitch presentations and so forth, we did some research on how much loan size, how much loans are originated every year. And of that, how much of it is private money versus institutional bank money. And to our surprise, actually about 52% of loans that are originated and closed every year is closed with private money. And that's both across commercial and residential. So when we saw that, and then we realized the size of the market we're talking about, which is a multi-trillion-dollar market in home loans on an annual basis, we realized that there was just a tremendous opportunity. And as anybody, as an investor or just generally who's gone through the bank to get traditional financing on their own house, I don't care if you have an 850 credit score and a great W-2 and you can prove income and everything else, good luck. It's such a painful process. So the need that we fill on the borrower side when they see a piece of property that they need to acquire and they need to get a deal done in 10 days, and we can make that happen. We get, letters afterwards from some of our borrowers actually just thanking us and how appreciative they were for how easy it was for them to go through this process with us.
Yeah. Can you share one of those stories? Like what's your personal record for speed of, somebody coming to you and say, okay, here's this thing, we need it funded. And if they had gone maybe traditional, it would take X amount of days. And then through you guys, it was Y.
Yeah, I mean, I'll give you two quick stories, one exactly on that topic and one just slightly different. That's something that was early on in our company. And I was like, this is actually a pretty cool story. But literally, we got a lead brought to us through one of our consultant relationships. And it was on a Monday and they needed to have the deal closed on Thursday. Their financing had fallen through. That happens a lot in the private lending space where you have a private lender make a commitment to actually get the loan closed and then maybe they don't have the funds or something comes up and they were going to lose the property if it wasn't closed by that Thursday. And because a lot of the work was already done, title was already pulled on the property, we were able to run background checks on the borrower. We were able to get the personal financial statements and the things that we needed to make sure that this was okay. We had appraisals on the property and everything else. They had their loan closed and funded, I think, by that Thursday. So, I mean, we were able to do it in 3 or 4 days. It was pretty fast. Probably though, one of my favorite stories, a lot of people ask me if, well, you're just dealing with people that have bad credit. And actually, I would say that at least half or more of our borrowers have actually excellent credit. And the problem they run into is banks, as interest rates have gone down, have just gotten so tight with their requirements for even being able to fund the loan, let alone how long it would take. We had a case in Augusta last January, so January 2020. this borrower has owned this building in downtown Augusta for several years. He had bought it from the original seller, and the bank had essentially called his note, and they're like, hey, listen, we're getting out of the commercial space, and you're going to, your note's due and you're going to lose the property. And so we started to, he approached us and we started to do the loan for him. And as we were going through our diligence, it turned out that there was litigation between him and the original seller. I guess there was sort of a agreement when he purchased the property with the second, but the second wasn't really recorded, and there was a lawsuit. And we saw the value in the property. We believed in the borrower. He had great rent roll. He had good payment history with his bank. He was just in a pickle. He was about to lose his property. And we were actually able to call the attorneys for the original seller, which was, believe it or not, 10 years prior, and say, hey, listen, this is sort of your one-time get out of jail free card. Like, we're gonna finance him out of this bank, and we can get your seller paid off. You just need to go talk to him and come up with a number that works. And we were able to help them negotiate the deal and get the deal closed. And that whole process took us maybe 3 weeks. And the borrower was actually able to keep the property, and actually has subsequently refinanced with us with an additional construction loan, because he owned the upstairs of the building in Augusta as well. And he's rehabbing it right now to add additional square footage and office space up there.
So now what do you need more of right now in your growth kind of timeline?
So this is interesting, and it's a little bit the model that I think both Joe and I have taken in our other businesses over the years. We really want to prove the model, right? And so we've done an excellent job over the last 3 years with Yieldi of doing that. To this date, we really haven't marketed for investors. So a lot of the investors that we have are really word of mouth from friends, family, that type of thing. So obviously, we've built this great technology, which we're really proud of. We've got a great reputation in the space. We're seeing more and better deals on a daily basis. We're very unique in how we can underwrite those loans. And we really want to get out more in front of people, make sure they understand, have conversations and that. And so because we're based in Atlanta, we've got a lot of history here. Obviously, that is where we're targeting. And that's what we need. We need more investors for sure.
So now are you looking, I mean, obviously an investor can come from anywhere, but you're looking to grow like from Atlanta through the Southeast outward, or it really doesn't matter?
Honestly, it doesn't matter. This month alone, we've closed loans in Houston. We've closed a couple loans in New Orleans, South Florida. Here in Atlanta, we've got 3 loans closing over the next 2 weeks. That's just literally the ones off the top of my head in the last 30 days. The investors that we have, they're all over the place. We have investors, a couple international even, but our investors, I have one in Wyoming. I mean, we've got investors really everywhere, but because we're here, because we have a lot of roots here, I've got a good track record, as does Joe and his family here. We think, building that up and really kind of cornering the market on people that are looking for different and interesting investments in real estate that are secure with the collateral that backs it, and being able to be here, come to our office, visit us, and know we're real people. And, we think that there's a great opportunity for that.
Well, congratulations on all the success. If somebody wants to learn more, have a more substantive conversation with you or somebody on your team, is it just the website to go and kind of explore on their own? Is that the best?
Yeah, go to Yieldi.com. That's YIELDI.com. And also can give us a phone call or email us at info@yieldi.com. We'd love that and be happy to take the time to walk through things.
Well, thank you, Josh, for sharing your story today.
Yeah, thank you so much for having me. I really appreciate it.
All right, this is Lee Cantor. We will see you all next time on Atlanta Business Radio.
Today's episode of Atlanta Business Radio is brought to you by OnPay. Built in Atlanta, OnPay is the top-rated payroll and HR software anywhere. Get 1 month free at onpay.com.